We're getting a lot of inquiries about the Brisbane market at the moment as people read economists and commentators discuss the BIS Oxford economics report on the property markets in Australia. So they're talking about Brisbane being the major growth area for residential property over the next 2 years. The main factor driving that, they say, is affordability, because Brisbane certainly didn't have the growth that some of the other capital cities did. So there's a couple of things that you must consider before you decide to just go and buy Brisbane as a result of this report. Firstly, the time frame. So 2 years is not a long time in property. That carries a lot of risk if you've got a 2-year time frame. 10 years is the cycle that we like to talk about. And certainly the longer that you're in the property market, the less risk that you are taking on. So over 10 years, is Brisbane going to outperform? Well, no, that's certainly not what they're talking about. In fact, they're saying that after a couple of years, some of the other major cities will take over once again. So that's one issue. The other issue is that the BIS is actually still quoting these generalisations. So they're talking about Victoria and New South Wales property market as a whole. They're not separating higher end suburbs, growth suburbs, outer ring suburbs, etc. And as we know, and as we discuss ad nauseum, you must, when you're talking about Australian residential property, separate those different classes of property. Certainly in the experience over the last 2 years, there have been many areas that have remained stagnant and have actually crept upwards in terms of property price growth. And they have been suburbs that are very different to the suburbs that actually experience losses. So it's really important when you're looking at these statistics to dig a little deeper, because you're certainly not necessarily seeing the whole picture from reading one report.